So we did one question in banking, and there's another question I gave you as assignment, but we were supposed to solve it today. And that's the question I want us to solve. So someone remind me which question was this? Which question are we supposed to be solving for banking? So that we can keep from there. Which section was that? If a question was supposed to solve. Someone to remind us. Which question was the assignment which we are supposed to do today? April 2022, Hilda, question 4. So April 2022, question 4. So please have that question. April 2022, question 4. Maybe if someone knows the page, you can also tell us so that others can check it very fast to avoid wasting time. Page 32. So check page 32. Yes, I will forward the question. April 2022, question 4 is the assignment I left, but we said we are going to solve it. And I told you there was something missing in that particular question. I did not check, but I'll know it as we read. There was one entry which was missing in that question, but I'll get it fixed. For now, allow me to read the question. The question says, the following information was extracted from the financial records of Delta Bank Limited as at 31st March 2022. So those stories, kusoma hiyo story yote itakuwa inapoteza tu wakati. We'll be wasting time while seeing, and that time also we don't have. So let's go to the notes, additional information. On 1st of April 2021, that is last year because we are in 2022, Delta Limited issued a shillings 450 million, 5-year, 8% coupon bond at par. The bond will be redeemed at a substantial premium, which gives it an effective interest rate of 12% per annum. There were no issue costs. The only accounting entries made were to record the cash proceeds from the issue and the annual interest payment on 31st March 2022. So what they did, they only debited the cash book. You know, when you are issuing the bond, you are borrowing a loan. So they only debited the cash book, then they credited the loan account, and that was it. So that is very wrong. When dealing with financial instruments, what you're supposed to do, you're supposed to amortize. You're supposed to amortize the bond so that you need to know how much is the amortized cost at the end. And the amortized cost is what you're supposed to recognize in the financial statement. Because here we have two rates. We have the effective interest rate and we have the contractual rate. So effective interest rate is the rate of capitalizing the bond. Look at the, right now as we speak, the CBK's lending rate. I don't know what is the base rate, but the CBK's lending rate is different from the commercial bank's lending rate. So CBK, I'm not sure, but maybe right now they are at around 11 point something percent. These other banks will give you at 14% and above, which is not wrong. So the 14%, ukipewa loan, that is what we call the contractual rate. The base rate for CBK is the effective interest rate. So as per IFRS 9 on financial instruments, you need to increase. So that increase is what I'm calling capitalization. You capitalize the value of the bond with the effective market rate, then you reduce the bond with the actual interest which has been paid. So the actual will be the contractual rate. So in this case, you can write there working one. So say working one, working number one, 8% is 8% bond. So 8% bond, 8% bond. So balance brought down on 1st April 2021. So balance brought down on 1st April 2021. The balance, they say, was 450 million. They say the balance was 450 million. Then the effective interest rate is 12%. You know, I want you to understand this thing. We normally have two rates. There is always the effective market rate. Effective market rate in a country issued by the the central bank. So central bank work on a base rates. Base rate takes into consideration so many factors: inflation adjustments, risk adjustments, foreign, all those stuff. So when they issue a bond, as years goes by, you increase the value of the loan or of the bond with effective market rate, because inakuwa impaired, it loses value. So you keep on increasing. Then the actual interest per year you reduce because that one is being paid. So for every bond, increase the bond value with effective market rate. So you add effective market rate, effective interest, which is at 12%. So 12% of 450. How much is 12% of 450? My pen is fed. I'll be adding more ink in a few. So what is 12% of 450? 12% of 450? 54. So you capitalize, you increase that with 54. Then you less the interest. I can call it coupon interest. So coupon interest is the actual interest which they are paying, which they have said is 8%. So this is 8% of 450. So what is 8% of 450? What is 8% of 450? 36. Therefore, the balance carried down will be how much? So you increase with the effective interest, then you reduce with the actual interest which has been paid. That is how we go about bonds. 468, Jenga, 468. So how is this relevant to us? You know what these people did, which the examiner said. What they did, when they received the loan, they debited the cash book with 450, then they credited the loan account with 450, and that is it. That is not how we do accounting for bonds. You need to amortize, so that at the end of the year, what will happen, this one here, the effective interest, this is what will go to the P&L. That one will go to the P&L, and this one here is what we recognize as a non-current liability. That 468. What is remaining? So the coupon interest, this one has already been paid. We assume the coupon interest is part of the effective interest in a because this one brings all the factors into consideration. So what we recognize is this effective interest, which we call finance costs. This is what we take to the profit account. Then the balance after amortization. Actually, this is another way of amortization. Instead of the other one, this is also another way, come as well in Kanogo, there is no need of drawing the table. So this is what will go to the balance sheet. So keep that one safe for me. Keep that one safe for me. We go to note number 2. We go to note 2. At 31st March 2022, that is when we are closing, the directors of Delta Bank Limited accepted a valuation report by a professional valuer, value, but it should be valuer, which revealed the fair value of the property, plant and equipment to be 2,500 million. The carrying amount of the property, plant and equipment amounted to 1850 million. Carrying amount is the book value of an asset. So the book value was 1850, they revalued to 25. So that is a revaluation gain. So the example is just, even you can be wondering now, so that's a revaluation surplus. How important will it be? Maybe, it's simple, but I'll tell you what the examiner wants. Working 2, there was revaluation surplus, which is 25 minus the 1850. What do you get? That is an increase of how much? That is an increase of how much? Of 650. So this 650, revaluation gain or loss, whichever. And now that is what the examiner was looking at. How do you treat it when preparing the P&L? It does not go to the profit account. Instead, you take it to what we call other comprehensive income. Other comprehensive income is any expense which comes immediately after tax. When you are done with the taxation, any income or expense which comes down there is called other comprehensive. So revaluation, I told you, I don't know what we are doing the last. Actuarial gains and losses, foreign exchange gains and losses, and revaluation. All of them, those three, when you get them in any question in this world, those ones you classify them as other comprehensive. They are not normal business. Unless come on a Forex, you know, their main business is to deal with those exchange. So if they gain, that is an income. But for any other entity, their business is not to deal with currency exchange and the rest. So if there is any foreign exchange gain or loss, you take them to other comprehensive. So this is what the examiner was checking at, because everybody here will get this, but now where do you take it? During presentation. During presentation, you take revaluation gain or loss to other comprehensive. Then the revalued amount is now this one here. This is what now you recognize as non-current assets in the financial statements. Then we forget about 1850. Good. Allow me to jump to note 3, which is the last note. Is the last note. So note 3, which is our last note. And I read, during the year ended 31st March 2022, the current tax on profit was estimated to be 890. There is no problem. They have estimated that to be that, so no problem. At 31st March 2022, the carrying amount of the net assets exceeded their tax base by 1,800. That is what we call temporary differences. These carrying amounts do not include the effects of revaluation in note 2 above. The income tax rate applicable to Delta Limited is 30%. What they are talking about is deferred tax. When you hear tax base, carrying amounts, those are temporary differences. So they want us to calculate deferred tax. So have here deferred tax account, which is our last working before presentation. So deferred tax account. Deferred tax account. So deferred tax balance brought down. Check for me in the schedule. Check for me the schedule. The deferred tax balance. Iko kweli. Was there deferred tax in the schedule? Yes. How much are you seeing? It is 370, 370. Joy has confirmed. So opening was 370. The rule is when you revalue assets, that revaluation should be subject. Hata kwa taxation mnagonga kuna konga na CGT, capital gain tax. So when you revalue assets, that revaluation gain or loss should be subject to taxation. So they have said they never taxed the revaluation in those two, that's 650. So you need to tax it. So revaluation, also you need to tax 30% of that 650. How much is that? You need to tax. Revaluation should always be subject to taxation. What do you get to that effect? $195. Then at the end of the year, balance carried down. They are saying that the carrying amount of the net assets exceeded their tax base by 18. The difference between carrying amount and tax base is what we call temporary. Tutakuja kwa deferred tax. That is the temporary differences. So you tax it off. So you take 30% of that 1800. So what is 30% of 18? 30% of 1800. What do you get? 540. Thank you. 540. So the increase or decrease is what will go to the profit account. So 370 plus 195. This is a decrease because that is 5, that is 6. 6. This 565. It's a decrease of how much? I'm seeing a decrease. Of how much? Decrease is a deferred tax income. 25. So there's a decrease there. Which comes this side? Now put your side because this is 565. So P&L, it comes this side. So P&L balancing figure. This is a decrease. Decrease in tax is a tax income. So people are saying 25. So therefore, down there you can say therefore total income tax is equals to current tax was how much? Check the same note 3. Current tax was 890. Current tax was 890. But now this one here is a tax income because it has decreased. Decrease in tax is an income. So I will utilize that income to reduce the current tax expense. So I will subtract 25. How much is our total tax to that effect? That is 865. All right, we are done. And we are supposed to now go straight to the presentation. There was something missing. Let me look for it. Come on, I pack right now. It will be before we start. In that schedule, there was mutually type alipokosea. Let me just check if I can be able to. What was this? There is something there. Yeah, I think I got it. There is this thing here. Let's go to the schedule. You don't go. I've remembered what it was. Go to the schedule from top. From top, there is cash and balances with the central bank, money on demand and short-term deposits, deposits with other commercial banks. Then after that, after the deposits with other commercial banks, there is something which was missing. Whoever compressed for us the paper is the one who missed. Munyakon original will be able to see that. There was this element, so I think you can fix it somewhere down there. Just get a space. There is something which was missing. There is something which was missing and which we need to capture. Deposit from other commercial banks. Deposits from other commercial banks. Please just insert it using your Bible there. Deposits from other commercial banks. The amount is 3324. 3324. That is the one which was skipped. Deposits from other commercial banks, 3324. Full stop. So I want you to write for me the heading there. I want to refill this pen. It is not very appealing. So write the heading, Belta Commercial Banks, Commercial Bank, Statement of Profit Stock Loss for the year ended that, underline. Have two columns, shillings in millions. I refill this pen, then we proceed. Just give me like 1-2 minutes. You can look at your heading. So that is done. So we need to go to the presentation. We need to go to the presentation of the final accounts. So this is nishaandika hiyo story hapo juu. Pesa Bank profit and loss account for the year ended. I don't have the black mark space to, so I will start immediately. Shillings are in millions. So the main source of income for the banks, we say that, is the interest. So right here, interest income, interest income. So interest income, you collect them from there. All the interest incomes which you can see. So there is interest on loans and advances. So loans and advances, you don't have to repeat the name interest. So loans and advances, we got interest of 25.75 to the far end. 25.75. There was interest on government securities. So government securities. We have 22.64. Then we have interest on deposits with other banks. So deposits with other banks. So interest on deposit with other banks. That one gave us 646. Then interest on deposit from will not be an income to us. When others deposit with us, we're the people to pay them interest. So that one, no. Interest on customer deposits, no. Interest on long-term borrowings, no. Those are interest expenses. So as far as I'm concerned, those are the total interest income. Unless there is one which you can see we have skipped. If none, then you can give me that total. So we go in that order. How much do you get? $54.85. So you get 54.85. Then interest expense. Interest expense. Interest expense, we have deposit from other banks. So deposits from other banks. Then we have, so deposits from other banks is 662. Then interest on customer deposits. So customer deposits. This one came to 1833. 1833. On long-term borrowing, so on long-term borrowing, we had 1385. Then there is nothing. But remember, there was that interest we calculated on the bond, the effective interest. That one, you bring it here. So interest on 8% bond, I think we got 54. The effective is the one you take. We got 54, if I can recall it well. So if it is okay, you give me the total. And that is how you do presentation for banks in that order. So give me the total of interest expense. $39.34. Joy, 39.34. So you subtract to get the net. So you get the net interest income. So the net interest income will be how much? Net interest income will be 1551. 1551. But there was some other income which are not interest related. So you bring them here. None. Non-interest income. So can you check out any income which was not related to interest? Let me check. You can keep on checking, but the only one which I'm seeing is only one: fees, commission, and foreign exchange income. So fees, commission, and foreign exchange income. Fees, commission, and foreign exchange income. It is only one, 6090. So total income will be 76. Confirm? 76.41. Is that correct? Is that okay? Yes, 76.41. Then also there were some expenses which were not interest. So bring them here. Non-interest expenses. Please master the format. That is the format for presentation. That is the format for presentation. So non-interest expenses, I'm seeing there administrative. I'm seeing administrative expenses, 2160. Administrative expenses, 2160. Other operating expenses, So other operating expenses, I'm seeing 1163. Then what else? I don't think if there is any expense, unless there is one you are capable of seeing to match up before tax. So just bring before tax. I don't think if there is any, there are only those two. Therefore, add 2160 plus 1163. What will you get? 33.23. 33.23. So you subtract, you get profit before tax. So you subtract it from 76.41. So 76.41 minus 33.23. What do you get? 43.18. 43.18. Income tax. Income tax, check that working, where we took the current tax minus the 25. What did we get? We got 8 something. We got a good enough. There's a figure we got there for the total income tax, 865. Therefore, profit after tax will be how much? Profit after tax is 34.53. 34.53. Then other comprehensive income. Other comprehensive income. Other comprehensive income. There was revaluation. Gain. Don't post to the end. Revaluation gain was 650. And the 650, you people taxed it. So less deferred tax. There was deferred tax on that 650. Which was that one? We took 650 by 30%. What did we get? Was it 195 or how much? So we reduced that revaluation, yes, 195. So the net amount of revaluation will be how much? We add it here. Then we talk of total comprehensive income. Then we are done with the P&L. So 650 minus 195, we are wrapping that up. $455. So total comprehensive, as we finish, is how much? $39.08. We are done. And you successfully get your how many marks? 10 marks. You get your 10 marks there without problems. And this is how I will mark the 10. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So there are 12. So marking will be any 10 times 1. So ticks are only where you see our located, not the totals. Nobody marks those totals, only the entries. So any 10 correct entries, there are 12, but whoever gets 12 will get 10. Whoever gets 10 will get 10. Whoever gets 7 will get 7. So you cannot just come out like that. Let's go to the statement of financial position. Unless someone has an issue, you can bring it up very fast. If no issue, then let's go to the statement of financial position. I'm checking on my space, so you write the heading there. Belta Bank, statement of financial position, as at that period. Then I connect from there. I hope everyone is done with this other side so that I delete. So killing that in millions, you have written the heading. So for banks, I told you, maybe just in case we forgot, we normally prepare that balance sheet in what we call liquidity. Liquidity means start with the ones which can easily be converted into cash. And therefore, there is no need of separating the two as non-current assets and current assets. Just bring all the assets, but try to play with the liquidity. Waangalie sana the liquidity issue, but at least try to show that you are doing it in liquidity. How will you try to show? Start with the cash held by a central bank, Apoju, then try to finish with the property, plant, and equipment. They normally finish with the PPE down there for the assets. So hizo zingine unaweza weka huko ndani. So just write assets. Don't bother about non-current and the rest. So just bring their assets. Cash and balance with central bank. Cash and balance with central bank. 4046. Money on demand and short-term deposits. Used to remain in nyingi. 2150. Deposit with other commercial banks. So deposits with other commercial banks, 4600. Investment in government securities. Investment in government securities, 4485. Investment in equity instruments. Equity instruments, 765. Before property, plant and equipment nataka kuja huko mwisho. So hold it kidogo. Intangible asset. Intangible assets, 4986. Loans and advances to customers. Loans and advances to customers. That is an asset to us because ukipeana loan we will receive back. So loans and advances to customers, 8144. Customer deposit is not our asset. Loan term, no. Other receivables, There is other receivables. Other receivables, confirm with me, 2493. 2493. I'm not seeing anything else, so I will bring the property, plant and equipment. Remember that one was revalued. So take the revalued amount. There was revaluation on it, and the revalued amount is 25. When you check additional information number 2, once an asset has been revalued, the revalued amount is what you consider. Therefore, unless there is an asset, maybe umeona tumeruka, you bring for me here the total assets. So at least, ukimaliza na PP na ulianza na cash, it can be seen that you are operating on liquidity. So someone is having an issue. The book, for PP, I think there is a small issue. Please visit PP. Someone is direct messaging me. PP, check PP in note 2. Maybe we never read it well. The director's evaluation report by professional valuers with this. Oh, okay. Yeah. PP, there is an issue. When you read note 2, they are saying as of this, the directors of Beta accepted evaluation report by professional value, which revealed the fair value of property, plant, and equipment to be 25. The carrying amount was 1850. So what happened here? They revalued a single property, not the entire, because when you check PPE, we check PPE in the schedule. When you check PPE in the schedule, the book value, the total book value of PPE in the schedule, I'm seeing 7416. So total was 7416. There is only a single one which had a book value of 1850, is the one which was revalued to 2500. So what should happen? We should take the 7416 plus the revaluation surplus, which was 650, the difference between 25 and 18. Because there is no way up at the 16, the new book value in Aqua 1850. So 1850 was just a single PPE, which was revalued to 25. So we just need to top up the revaluation gain on top of this. So 7416 plus 650 will be how much? I'm going to change there, but being one entry, tunaweza jiconsole kwa mtihani, that one is not big issue. 8066. 8066. So how will your answer change for the total assets? How will your answer change for the total assets? $39,735. $39,735. Yeah, that one has been confirmed, so we can proceed. Let's go to equity and liabilities. So we start with equity. We start with equity components. We start with equity. We start with equity. So equity, there is ordinary share capital. Ordinary share capital. Ordinary share capital was 4,400. 4,400. Share premium. Share premium was 25. Was 2,500. Deposit protection reserve. Because what want to deposit now in case of any reserve is equity. So deposit protection reserve. They had a reserve of 5,000. We proceed. Retained earnings. So retained earnings. In the books, I'm having 3623. 3623 plus. So add for me PAT, profit after tax. We select the other comprehensive. How much was our profit after tax in the P&L? Can you check the PAT? There were no dividends to get on. So how much was our profit after tax in the profit account? So you top it up to the retained earnings. 34.53. 34.53. So how much will our retained earnings be? 70.76. 70.76. I don't see anything under equity. I don't see whatever we have left. Kuna kitu tumeacha kwa equity. So can you come up? No, other comprehensive. There was other comprehensive. Other comprehensive income. So check your P&L. The total other comprehensive, which we got after tax, it was for something. For what? Other comprehensive, the revaluation minus the tax, it was coming to 650 minus 195, 455. 455. So add for me the total of equity. Add for me the total of equity. $19,431. 19,431. All right. Then liabilities also don't stay non-current and current. Even liabilities for banks, just group them together. So stay here. Liabilities. Liabilities. We can start with any. Kuna ile ilikuwa imeachwa, we can start with that, but the one which is always very liquid is the customer deposit. Hiyo bana, mtu ana deposit CBD akifika Westland ashatoa pesa yake. So customer deposit is always liquid. Customer deposits. Customer deposits. Then yeah, where is customer deposits? Yes, customer deposits is 7065. 7065. Then we can check deposit from other commercial banks. The one which was missing, you will remind me that figure. Deposits, not reminding me, I just want to see whether you captured it. Deposits from other commercial banks. It was not appearing in the schedule because of typing issue, but we fixed it up. How much did we fix? I want to see whether people walikuwa wameandika. How much? 33.24, yes. It was 33.24. We proceed. We proceed. There are many. There is, we can bring the long-term borrowing. I'm seeing long-term borrowing. Long-term borrowing. Long-term borrowing. It is long-term and long-term, whichever. I think they meant long-term. This one is 5660. 5660. Then we have other payables. So other payables is 2717. Then there is 8% bond. So can you check for me the 8% bond, the balance carried down? It was the first working we did. The balance carried down for the 8% bond. 8% bond, what was the balance carried down? 468, Jenga. 468. Give us there. Deferred tax. Can you check for me deferred tax account, the balance carried down? The balance carried down in the deferred tax account. We came up with deferred tax account, the last working. Jenga 540. In the deferred tax account, there was 540. Current tax is also liability, but current tax we have to be careful. Check note 3. So when you check note number 3, current tax was 890. However, in the schedule somewhere, I saw them talking of installment tax paid. So the total liability is 890, of which when preparing P&L, you consider the entire amount, whether paid or not. But for the balance sheet liability part, you need to subtract what has been paid. So 890 minus 360, we are talking of how much? 530. What is becoming here? Is there anything we have left out? Not 1 done, not 2 done, not 3 done. I think there is nothing. Can you try to add for me? Try to add for me these current liabilities. Not current liability. Your suspense, I'm not seeing where the suspense is going to, because able to malize kwanza, then I can discuss the suspense. Total liabilities. How much is the total? Jenga and the rest, 2304. 2304. Yes. So total equity. Total equity and liabilities. Total equity and liabilities. Can you confirm whether it is balancing with our total assets? Total assets was 39,735. So join balancing, yes. So that is 39,735. 735. I don't know who was asking about the suspense, but yes, I'm seeing suspense account of 414 on the credits. What could this suspense be? You know, what is suspense account? Suspense account is an account where you record untraceable figures. Unajaribu kubalance hiyo kitu inakusumbua. Utaki pressure, unaweka huko kwa. Utakuja kujua baadaye. So maybe there is one of the figures, I'm trying to retrace which one it could be. Kwenye labda walikuwa wamemess. Nashuku labda walimess kwa hiyo loan, hiyo not one ama something. Ama tax. So they recorded it. There is a figure they could not trace. And maybe with us, during computation of not 1, not 2, not 3, because it will arise in the notes, in not 1, not 2, not 3, we treated here correctly. So if they are not telling us where the suspense, because the examiner should tell us that the amount appearing in the suspense account of 414 was due to blah, blah, blah. Then now we correct. But when they give us the suspense, then they keep quiet. How will we know? We just do what is there. So in the process of doing working out the notes, we rectify that suspense without knowing. And that is none of our concern. That one also gives you another 10 marks. So that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Any, no, not any. That is not any. They are 21. So it is 20 and a half. 10. Actually, any 20 because they are 21. So any 20 and a half, you get the 10. So whatever you get, you multiply by a half. Hawezi toka hivyo hivyo tu. That is close to impossible. Close to impossible. So allow me to rest banking at that stage. And I believe if they try to bring it in exam, you will not say this thing is not meant for us. You will mutapita nayo mapema without any stress. Yes. Any question? I want to introduce next topic, unless someone has a question, a concern, or anything. Yes. Let me read. Someone is bringing up something. Who is this? Hilda. Hilda, si ebu post kwa class yote ndio mtu mwingine asiseme the same. Wewe umeniandikia direct. Can you bring it to the entire class? To everyone? Yes, thank you. So Hilda is saying, if you can read down there, I think the suspense account balance is related to the entries made in note 1, the 450 bond proceeds and the interest. So 450 by 8, 450 by 8 is 450 minus the 36. 36 the actual, oh yeah, maybe, which is 414. So in your mistake, qualifying, well, that is the mistake. Actually, it is that one, it's that 414. So us as professionals, we have done it the correct way without even wondering where it came from. So that one stands out to be none of our problems. And we rest it at that stage. So at this moment, I want to bring up our new topic. And our new topic. Early morning, hata kama ni nini not early morning, our to our evening. And if we are doing what we have done, we have to come a revision. Tuseme hiyo tulishafanya. Okay. We must be here. So our new topic is IS number 12. IS number 12 is our new topic. IS 12 is our new topic. IS number 12 is our new topic. Muniambia IS 12 is which topic? Angalia hapo. Check on your Google platform. IS 12 is on income tax, Jenga, that is true. With main focus, on deferred, main focus being on the deferred tax part of it. Yes. So IS number 12. Income tax. Income tax. So our main focus is going to be on the deferred tax, but remember, it has deferred tax has both current and deferred. Though current tutafikia tu kidogo tu, hatutakaa hapo sana. Our main issue is going to be on the deferred part of it. That is where our main issue is going to lie. So let me see if I have good notes for you, just in case, because dictating all those things can waste my time. Stretching out just 1 minute. I check if I have. If I don't, then I'll take you the way I know. You can stretch a bit. Those who have not, your friends when you kuja class wambie wakuje, towards the end of this month, tutaanzia group accounting. Group ikimwacha nje mwambie yeye akuje hiyo siku nyingine. Right? That is quite brief. So deferred tax is a complex area. What are you to end the most? So write for me down there and you say, although I'm going to compress it because I'm not doing it the tax way. Let's do it financial reporting way. So tutakata hizo notes. We will not write everything like the other side. So you say income tax. For financial reporting purposes. Income tax for financial reporting purposes. Income tax for financial reporting purposes is classified into two categories. I.e. current tax, and we have deferred tax. Current tax and the deferred tax. Full stop. Allow me to start with current. Tax before we go to deferred tax. Allow me to start with the current tax. So current tax, you say, is a form of income tax. Assessed. A form of income tax assessed on an entities, because here we are dealing with corporates, assessed on an entities with the apostrophe, assessed on an entities taxable profits. Assessed on an entity's taxable profits. Full stop. Down there, you say taxable profits will be, how do you calculate taxable profit? You pick the accounting profit before tax, you add back the disallowable expenses, disallowable expenses. For financial reporting, the common disallowable is depreciation. So e.g. depreciation minus allowable expenses, e.g. wear and tear allowances. That is how you get taxable profits. So taxable profits is the accounting profit before tax. You add back, what do you illustrate? Add back depreciation, then you subtract the wear and tear. Therefore, current tax is equals to taxable profits times taxable profits times the tax rates. Mostly, the tax rate we'll be using here is 30%. Watakuletea kwa swali, but haitakuwa that complex for current tax, but tutaona they are there. So when you are calculating the current tax, ndio hii mnalipanga sijui 30th June. The one you normally assess after doing your audit and the rest, na udanganya taxman. Unanga watu wanalipa the actual tax. Unless there's something coming up. There is something coming up. You know, I'm dealing with accountants, so we have to go real. Najua labda kuna watu wa KRA. They are saying that beginning 1st January, I don't know whether, so can someone to confirm? I remember they said that beginning 1st January 2024, the claimable expenses are now the allowable. You know, allowable expenses are those which you are supposed to subtract for tax purposes. So they are saying the allowable expenses will only be those expenses which are generated through the e-teams, by extension, by slim extension teams. So if kunaita pia tumezoea when determining taxable profit, mtu anasema to less administrative expenses 10 million, operating cost 4.6 million, taxable profit. Imagine mtu alikuwa na revenue sales. It is happening outside here. Mtu akona sales or income for the year of around 200 million. Expenses here, akiangalia the reality expenses akona expenses ya 60 million. So 60 million, you know, that is 140 million. So the remaining 140, taxman wanataka 30%. What is 30% of 140 million? 30%. So taxman anasema hiyo ndio profit nyingi. What is 30% of 40 million? You know, sometimes also we have to go practical with the surroundings because we are accountants. What is 30% of 140? That one comes to 42 million vera. So watu huku ile kitu wanafanya wakitaka tax the 42 billion to KRA, never. So they start now looking for ways of bringing this 140 million down. Mtu anaandika tu marketing cost, what operating expenses, wanasukuma instead of 60 million wanaeleka mpaka, instead this was 200 million, this one they will declare correctly, then sasa expenses utapata imefika 198 million. Fictitious, wanaandika tu papa 198 million, so that here is 2 million profit times 30%, they are comfortable to give KRA 600,000. So instead of paying 42, tunapeana 6. So KRA wamekataa. Wamesema any expense you will claim from 2024, it must be an expense which has been generated from eTeams platform. That is, hiyo umeshapitisha, hiyo ina maneno mengine. So that was by the way. We proceed. You write there and say, current taxes are measured. Current taxes are measured. Current taxes are measured. Are measured using the prevailing tax rates. Using the prevailing tax rates. Stroke laws. Taxes stroke laws enacted. Laws enacted as at the balance sheet dates. As at the balance sheet dates. Full stop. Full stop. Full stop. I don't see anything much. In fact, I told you I'm not going to waste time with the current. The main issue is kwa defined. So just write for me a small illustration. Hapa kwa current illustration. So my illustration for current tax is, I don't know whether you have, confirm whether you have, let me confirm with my paper first before I subject you to. But can you check if you have September 2015? September 2015. Question 3. Please someone to confirm. In my paper already, I can be able to see it. So you confirm for me whether you have September 2015. Question number 3. Yeah, 3B. Page 40. No, where are you work now? Can you confirm whether you have set enough mwisho kabisa? If it is there, it should be towards the end. Yes, page 127. So please check page 127. Though 4 minutes will not be sufficient for us to calculate that current tax. So allow us to work it in the next class. 4 minutes tutakuwa na harakisha. Hiyo swali ni refu. Nitakuwa nawapeleka hapa mbio for no reason. So now before you log out in the next 1 minute, I said I need another remedial class. Then there was a proposal from some members that instead of having 2, we can have 1, but for more hours. To some extent, I also tend to agree. So someone proposed, I can't recall who was that, but someone proposed. Ndio wenye walikuwa wasiseme ni mimi nasema. Someone proposed we start as early as what time? So that you bring it back yourself. Someone proposed we start as early as 5 a.m. Maybe it was better. Someone said we can start at 5 a.m. asubuhi. So I need
6 weeks.
Someone said, James? So if we start at
6.
ilikuwa proposal.
Exactly.
The proposal, someone said 5 a.m. to 7 a.m. Then break 7:30 a.m. to 9:30 a.m. Then I will not need you for any other remedial class, if that one can be comfortable. If it is 6 a.m., then we just adjust with 1 hour, so to stop at 10:30. So this is on Sunday. Because Sunday we want to pack up and play 2 sessions, ile asubuhi na jioni. So people are saying instead of morning and evening, we can wake up very early, then we move up to around this time. Then we don't meet another class. So we are meeting on Saturday. Keep on brainstorming. We start at 6 to 10:30 or at 5 to 9:30. Then we are okay. Me, I can wake up at any time. Adam mkisema 4. So, but when we do that, when we cooperate that to make up, tutamaliza hii syllabus mapema sana. because mi sitaki hiyo kitu ya kufanya swali moja, at least ikiumana sana kufanya maswali mbili. My problem is group is very wide, so that is why nataka hizi ndogo ndogo zituondoke. What about on Saturday? Saturday early mornings niko na nani? Saturday early morning niko na nyinyi, but the problem I have on Saturday, most if not all, most of us are working on Saturday from 8. Some are going to church also around 8, 9 thereabout. But my cousin wenye wanafanya kazi on that day. So Joy saying we reduced the break to 30 minutes. To the 30 minutes, Joy, nani? Joy, 7 to 7:30. How we reduce it downwards? So Saturday, the problem, people are going to work. That is where the problem is. So you keep on thinking about it, then you conclude on Saturday. So Sunday we can start the 4 hours. Tatusaidia kusonga. Hata hiyo the fact tutamaliza. Thank you. Have a nice time. Brian, sawa, we will check.